Stats Trader is here, and this is part 2 of Excel stats tracking video. Now in this video I'm going to show you a strategy that I effectively use whenever a stock performs a reverse split. First of all, what is a stock split? Reverse stock split is the action that a company makes in order to basically shrink the shares that it has in order to make the existing shares more valuable. So let's say, for example, a company owns 1 million shares, and let's say it's 1 to 2 reverse stock split. Now the company will have 500,000 shares, which will increase the stock price. What people do is they blindly buy a stock right when it opens. This is what you see would happen right before the split. Let's say previous day the closing price was $5, right? And now today in the morning the company comes out and they say, okay, now we're performing 1 to 2 split, which means 1 million shares that we have in open market become 500,000 shares. And then what happens is there's really no pre-market trading because, well, nobody was trading the stock pre-market, right? And the stock opens, so let's say it's 9:30 a.m. and stock opens at $10. But the problem with that is there's a lot of people who see this 100% increase pre-market, and they just, what they do, they just buy this stock without really looking at the fundamentals, without looking at the stock, and they don't even know that the stock performed reverse split. See this 100% gain and they buy it market here, and a stock goes another 50% from the open, and the stock goes from 10 to, let's say, $15. Well, but me and you would know that it was a reverse split and there was really no change in the market in stocks fundamentals. So what I'm gonna do, I'm gonna short this spike. So I'm gonna open my short here, and I'm gonna wait till price goes at least to here, to its open, and I'm gonna cover my short. This is the basic psychology, the basic strategy, countering all these people who don't know what they're doing. Now let's talk about what can we track within this strategy. First of all, the first thing that we're tracking is high percentage. I want to know what's the high percentage on the day. So I want to know this chunk, how much a stock went from its market open to the highest point of the day so I can short it, right? Second thing I want to track is close percentage. I want to know exactly where a stock closed on a day relatively to its open price. So this is the open price. So let's say it closed here. So I want to know this close percentage. So from here to here. What's the low percentage? I want to know how much stock went from its open to its lowest point. So right here. Then another thing I absolutely need to know is volume before drop. So VBT. So what is volume before drop? I want to know what was the volume that was traded from its open to its highest point. So if you look at the bottom of the graph, most likely you will see these volume bars, right? They will look something like this. And I want to track what was the volume before this essential drop. So that's number 4. Another thing that I need to track is know volume on the day, or daily volume. So I'm gonna put daily volume here. Why are these parameters important? Because volume before drop, if I track, let's say, 100 samples on reverse split stocks, and let's say I see a spike and I want to short it, well, this parameter will tell me when it's more likely to drop, after which volume, or the minimum volume that has to be traded in order for stock to start dropping. These are the main parameters that we need to track. Another thing, of course, I need to track market cap, and I need to track also the float. Market cap is pretty obvious, you know, because we know that lower market caps, they tend to spike more, and higher market caps, they almost never spike. So also the same thing with the float. The low float stocks tend to spike more, and also I need these averages to kind of estimate what strength of this spike is going to be. Number 7, what I absolutely need to track is float volume ratio. Volume before drop, and I'm gonna divide it by overall float. And this ratio will give me the number, the ratio that will show me how much a stock rotates before it actually drops. I know that some people would buy at 10, some will buy at 11, 12, 13, 14, 15, and this will tell me if it's a low float stock, what's the volume, that the max volume that can be put in the float in order for it to. It's kind of really important to look at a stock in terms of how much volume a stock can trade, because you know it doesn't matter what stock it is, it has its volume caps, which means there's only, you can estimate the number, how many shares can be traded on the day. Based on this estimation also you can kind of approximate, or you can change your entries a little bit to maximize your profits. Number 8 is the optimal entry. So I'm gonna put here optimal entry. Now, what is optimal entry? Optimal entry, basically, this is the perfect price at which you can enter your short. So as you can see, let's say this was the market open, and let's say there was a spike and then you shorted here, but then a stock goes against you and it goes here, so you put another short here. So obviously the optimal entry for you would be right here. Entry is basically the approximation that you can use, not jump in the trade. So let me explain it for you briefly. So for example, a stock it opened at 10, let's say the same thing, it went at 15. So your entry, optimal entry would be, so you're gonna have, let's say your entry was at 12, right? Formula for optimal entry is optimal entry, which is 15, minus your entry, and you divide it by the optimal entry. The optimal entry, 0.2 or 20%. That means that I was 20% off from my optimal entry. So from 15 to 12, my mistake percentage entry was 20%. I can, whenever I want to get into a trade, I want to know, wait a second, so I'm actually 20% off from the best entry I can make. So this is a very important adjustment that I make with all of my patterns, and that's how I'm able to wait for a better price to enter the short. Now let's just go ahead and let's go to my computer, and I'm gonna show you how to record everything I said in Excel spreadsheet. Okay, so this is the stock that performed a reverse stock split. It was last Friday. I was trading it, so let's just review the trade. So as you can see, the stock, well, first of all, this is the daily chart. So as you can see, the stock a day before it was 76 cents, and then it opens at 350. So it opened at 350 right here, and then of course you have this massive push. People are just being emotional and they're buying it blindly. And I know that it's gonna go back to reality, so I shorted around here on this red candle, and then I closed it around here. It was a pretty solid game for me. So let's just walk through the Excel spreadsheet and how can we track it. Well, first of all, we're gonna write down the following column, or we're gonna build the following spreadsheet. So we're gonna have averages here, and then date, ticker, open price, closing price, day low, day high percentage, day low percentage, percentage gain on the day, profitable or not. Then we're gonna calculate the winning percentage. We're gonna say which day of the week it was. It's a separate formula. Then of course market cap, and then float. We're gonna track volume, and volume before drop divided by float. And then we're gonna collect the entry, the optimal entry, and the percentage wise of how much we missed. So this stock, it was 1-to-5 split. So let's just go ahead and fill out all the fields for the Excel spreadsheet. So first of all, date, we're gonna put, it was 5/7/2021, ticker LMFA. Now let's see the open price. So open price right here, 3.69. Okay, I had to switch the terminal because my TradeZero terminal doesn't work for some reason. So yeah, let's see. The open price was 356. So we're gonna go ahead and record this. 3.56. Closing price was 4.47. Day low was here, 3.55. And day high was at 6.4. So 6.4. Now we need to know this daily gain percentage or daily high percentage. So it's essentially how much percentage wise the stock went from the open price right here to its highest price. So what are we gonna do? We're gonna put the if statement. So we're gonna say if, we're gonna say open parentheses, if, let's say this one, so the date, and you can make any reference, it doesn't really matter, equals nothing, then give me nothing. Otherwise, what I'm gonna do is I'm gonna calculate, so I'm gonna put this formula, give me the high price, so F3 minus open price, which is this, and you make this reference, and you're gonna divide it by the open price. So again, I click C2 or C3, gonna click OK, and we see that the high percentage for this stock was 80%. Now we do the same thing with the low percentage, so we also do the same thing. If open parentheses data equals nothing, then give me nothing. Otherwise, open parentheses, give me open price minus daily low, and I'm gonna divide it by open price. So daily low percentage 0%, which makes sense. The stock didn't really go down on this day. And then gain on the day percentage, we do the same thing. If reference data equals nothing, then give me nothing. Otherwise, take my close percentage, oops, so closing price minus my open price, and I'm gonna divide it by open price. So now we see that the stock gained 25% on this particular day. Now winning percentage, that's the formula we'll put in later. Day of the week, so this is the following formula that's here. Let's go down and let's see how we calculate. So basically we make this reference. If the date equals nothing, then give me nothing. Otherwise, the formula is text, comma, and then you make a reference to the A3. So that's your date right here, comma, and then you do this, D, and you close the parentheses, And in this column, you should have a day of the week. So that's Friday. Now the market cap for this stock is 24. Oops. And the float is 5. Now let's look at the volume that the stock gained on a day. Again, we're just gonna come here and we see the volume traded on what? It's not the stock. Okay. So it was 6 million shares. Okay, we don't need that anymore. So roughly 6 million shares. We're gonna put it here. Now volume before drop divided by float. Actually, we need another column here that I completely forgot about. It's your volume before drop. Volume before drop, and let's see the volume before drop. So here it was 56, 78, and it doesn't have to be exact numbers. So 120 plus 40, 160, 400, 500. So let's say 700,000 shares. So in that case, just to make it easier for you to calculate, let's say 1 million shares is going to be 1. So for me, volume before drop in this case is 700,000. So I'm going to put 0.7 because, you know, it's less than a million. And then float volume. Now, how do we calculate this ratio? So we're going to do, again, the same thing, if statement. If, let's say, this one equals nothing, then give me nothing. Otherwise, give me volume before drop. I'm going to open parentheses, volume before drop divided by float of a stock. I'm going to close it. Yes, accept correction. And in this case, it's 0.14. Now, it doesn't really mean anything because we only have one sample. But as you gain more sample and more data, you're going to see that this ratio will actually make a lot more sense because you'll see the average and you will know how much volume can be put in a float before it actually drops. Then we're gonna put our entry. So my entry was, I think it was around 5.71 or 5.7. So I'm gonna put 5.7. And optimal entry obviously is right here. So 6.4 because it's the highest point because we're shorting a stock, right? So we're gonna put 6.4. And then what's my miss percentage? That's the formula that we're going to calculate. So that's basically your optimal entry. So we're going to make this reference. And again, we're going to do this if statement. And let's just make another reference. Let's do if this one equals nothing, then give me nothing. Otherwise, open parentheses. I'm going to take my optimal entry minus my entry, and I'm going to divide it by optimal entry, so S3. I'm going to close the parentheses. Yes, I'm really bad at these. So, and you want to make this column percentages, so you want to highlight the whole column here and you want to press the percentage button, and here we go. You know that my entry was here, but my ideal entry was here, so my miss percentage was 11%, which is pretty good. But once you get the average, you will know that what's your average miss percentage, so you can adjust your entries. You can be more patient or maybe short it in a few different positions, so don't short it all at once. Let's say you short 2,000 shares, short 1,000 shares, then another 1,000 shares, because you know you're going to be wrong by at least 11%, right? So now the most important part of this, why do we track data? We need to come up with the averages. So next time when I trade the same stock split with a different stock, I want to look at some kind of averages, and I want to look what to expect really. For that reason, let's say I know that the stock spiked 80%, and let's say I have 20 samples, and then I create the average. So what I do here is equals average, double click, and what I do here is I highlight, I go from here, go all the way down, close the parentheses, and boom, we have, oops, why is it 640? Well, never mind, I made a wrong reference. So we're gonna say average, and we're gonna come from here, and we're gonna close it. And here we go, we have this average day high. So the average percentage from open to the highest point is 80%, but we only have one sample, so it doesn't really tell us much. Then we're gonna drag this whole thing down, and what's gonna happen is whenever you put these data for all of the other samples, these fields will autofill. So the same thing I'm gonna do here. So I'm gonna say average equals average, and double click, and I'm gonna make reference from here all the way down. So 0%, and of course these percentages are gonna change as you put in data later on. Gain on the day percentage, the same thing. You can actually just take it and drag it here. So here we go, you have all your averages here. You know that on average it goes up 80%, it doesn't really go down on the day, and the closing percentage is 26%. Okay, so let's move on here. And yeah, volume before drop divided by float. You also want to know the average because it's the ratio. So you're gonna put average, make a reference to this point, go all the way down, close it. Right now your average, well, let's make it 0.14, and miss percentage, you also want the average. So what you're gonna do is equals average, and you make reference to this one through all the way down. Here we go, and for some reason it's black, I'll just change it to white. So 11%. So here we go, and after you collect the data, you will have averages for these kind of spikes for stocks that performed reverse stock split. And after you track 50 or 100 data, these kind of reverse splits, they don't happen that often. And normally they happen after a company kind of wants to bring some life to its stock, or after really, really bad news, because they essentially want to create this hype for people to buy the stocks, and you can definitely take advantage of that. So yeah, that would be it. Thank you guys for watching. If you have any questions, ask me in comments in this video, and thank you guys for watching, and see you guys next time.